Welcome back. Interest rates are pulling back this morning after hitting their highest level since January 2025 as the bond market is pricing in inflation. The yield on the 10-year right now sitting at a level of 4.65%. That is down 1.5 basis points. Fox Business has confirmed that incoming Federal Reserve Chairman Kevin Warsh will be sworn in this Friday. He will be sworn in by President Trump. But President Trump says Warsh will make interest rate decisions without any White House interference, calling him a talented guy and that he will do a good job, said the president. Joining me now is former Treasury Undersecretary and former World Bank President, American Global Strategies Vice Chairman, David Malpass. David, great to have you. Thank you so much for being here. And I want to get your take on something that Jeffrey Gundlach said to me. Of course, he's the CEO and founder of Double Line Capital, about $100 billion in assets under management. And I asked him what he thinks about Kevin Warsh and interest rates. Watch this. On Kevin Warsh, the president wants him to cut rates. Can he cut rates right now? Would you ever see Kevin Warsh raising rates?
I think that based upon the term structure of the Treasury market, the odds-on bet is that the next move by the Fed will be a hike. I know that that was not the way we entered the year on the consensus thinking. People were looking for 2 rate cuts this year, but the inflation market has simply not cooperated. And it's just not possible, in my view, to cut interest rates when the 2-year Treasury is almost 50 basis points higher than the Fed funds rate.
Jeffrey,
the next move would be a hike.
So that's what the markets are telling you. Your thoughts?
There's still more to go from the Straits of Hormuz closure. And so one worry is the inventories are being drawn down, and then there'll be some price increases still to come from that. And also, I think shortages, stockouts, and that causes people to begin hoarding and buying in advance. So you've got this deep oil shock, supply shock, that is rippling through the economy. Very good to be with you. It's great that Kevin Warsh is being sworn in. That will help a lot. With regard to the interest rates, there is this movement around Wall Street to say, well, Kevin's weak on credibility. He's not. He's super credible, and so he'll give confidence to the markets. That matters a lot as you're thinking about what the interest rate needs to be.
So you're saying that you went back to the Strait of Hormuz. So you're saying once things get settled in the Strait of Hormuz, oil prices will go down, the inflation threat goes down, and then there won't be a need to raise interest rates. Is that what you're saying in terms of?
That's right. And so people are saying, well, the Fed has to react to today. Isn't that the whole problem? The Fed looks backward and reacts to the last problem. If you have the Fed's models looking at the supply side of the economy, that's going to help a lot. Unfortunately, a big part of the FOMC, the Federal Open Market Committee, is what I would call demand-side model entrenched thinking. It's the old thinking about the way the economy works. So they think higher interest rates somehow will cause inflation to go down. Why would that be? Businesses can't borrow and they can't produce when you do that. The models that they're using now think that growth in some way forces the U.S. to have higher interest rates. Why would that be? If our economy is doing better, we can have lower interest rates. And we're in competition with China, which has substantially lower interest rates across the curve.
Yeah.
Are they more credible? No way.
Well, I mean, look, oil prices are ticking lower this morning, and President Trump is keeping the Iran conflict front and center. He said that he paused further strikes on Tehran, but that was because of pressure from Gulf nations. But he said that, we could see the fighting resume and the strikes resume either this weekend or next. But national average for a gallon of regular gas, $4.55 a gallon right now, with oil prices still elevated, even if they are pulling back today. If not rate moves from Kevin Warsh, what else would you expect to be some of his first moves? Do you expect him to make the Fed's balance sheet smaller?
I think there will be and should be changes about this forward communication. The Fed has been talking and all the time and often wrong. And so there doesn't need to be as much forward communication. That's the dot plots and all of the rigmarole that they do to show that they aren't very good at forecasting what the future is. So the changes there. With regard to the balance sheet, one problem, I think it has to be explained clearly as a growth policy to have the Fed less mess in the middle of financial markets. You know, Michael Barr did a remarks day before yesterday, which didn't make sense to me. And he's saying the Fed has to provide the liquidity within the economy because we're the only ones that can do it. That's the ego that's gotten them into so much trouble.
Great point.
So I think the balance sheet can be smaller, the regulatory policy can be more pro-business, and the monetary policy can be supply side.
Well, I mean, look, you've got a situation where the backdrop is so positive right now for the economy, and, you know, it's amazing. We're at war. We've got $100+ a barrel oil, and yet growth is resuming and strengthening in the United States. Earnings have been very strong. We're waiting on NVIDIA reporting tonight. How would you assess the macro story of the U.S. economy, and how does that compare to international economies?
So by far the best economy in the world, so we all internalize and say, well, it could be better. And some big part of that is the production coming out of the big, beautiful bill. Remember, the tax change was massive. It makes permanent this business-supportive tax code that's causing so much investment. So across the country, people want construction, they want manufacturing jobs. And so I think we, as a country, need to be more proactive along President Trump's lines. Think we're sitting in New York City. He built a lot of these buildings and the ice skating rink and the things that make New York the most successful city in the world. That can be done and should be done nationwide, but it takes construction jobs, manufacturing jobs, and people with skills. I think we have to look inside the education system and say we need high school graduates that read and write and want to really go work and make money, make a lot of money.
Well, I mean, it brings me back to tech and NVIDIA tonight, because a lot of this excitement in the economy is coming from this build out in data centers. You know, we had the president of Meta on, Dina Powell McCormick, who said that we're going to see 500,000 new electricians. I mean, the construction, the electricians, all of those are jobs that are out there and coming, increasing in numbers.
Exactly. This is the Michael Rowe and dirty jobs, and that means people that can really come to work every day and say, I'm going to create something new, I'm going to run my machine better, I'm going to invent something new, and that is available to us. So we kind of dwell on the bad side, but we should really be looking at the U.S. just surging forward with enough capital, with enough labor, you know, the envy of the world in small business creation. But back to where we started, the Fed needs sweeping reforms in regulatory policy, balance sheet policy, and interest rate policy in order to participate.
All right, well, we'll see.